Hello and welcome to this week's episode of Corporate Corridor. I'm Taha Siddiqui. Now, we are all aware of the fact that running an oil marketing company or a refinery in Pakistan could be a difficult job with the ongoing rupee-dollar parity, with the ongoing intercorporate circular debt. This is a difficult task, and what lies ahead? What problems are there for the OMCs and how would they handle the ongoing situation? We would be speaking to Mr. Mumtaz Hasan Khan, Chairman and CEO of Hascom. Sir, pleasure having you with us.
Thank you very much for asking me.
Now, sir, let's start off with Hascom. Now, they are engaged with purchasing, storage of oil and sale and oil marketing of fuel oil, HSD, gasoline. It is a new company. How is it coping in a country like Pakistan?
Well, Hascom started in 2005 when we got the oil marketing license. Since then, we have put up about 130 retail outlets all over the country, and there are another 50 under construction. Our business plan is more or less the same as that of Shell or PSO or Caltex, though on a much smaller scale, because we are a newcomer. Our biggest challenge at the moment is to create a level playing field for the new marketing companies as against the companies which are well established. The new marketing companies, being new and not having strong balance sheets, face challenge in being able to source product competitively from the refineries, local refineries, or to import than the existing marketing companies, who over the last 50 years their assets are fully depreciated. They have built huge, strong balance sheets. And I mean, take one example. If I today go to a refinery to buy product, I am told to pay money in advance for the product that I buy.
And the reason being for that is?
They say because we don't know whether you will be able to pay us if we give you credit. Whereas existing old companies like Shell and PSO get 21 days credit from the refinery. So this puts them in a much more advantageous position.
And how long does it take to build up that confidence level if you are to acquire that fund in advance or the product in advance?
Well, I mean, we can import the product also, but again, importing product means today, if you were to import a tanker of, say, diesel, we'll have to open an LC for $20 million. That is a hell of a lot of money, and most banks are reluctant because they don't understand trade finance very well. Most banking over here is done on asset-based finance. Whether the asset is a dumb asset, you have seen so many cases of large groups going under because the banks have lent money against assets and not looked at the cash flow of the company.
And then they have the fear of non-performing loans as well.
And they have a lot of non-performing loans. But I think none of those non-performing loans relate to oil marketing companies. They all relate to big industrial groups, whether it's a cement company or whether it's a sugar mill or whether it's a textile mill. These are the industries which have had their loans written off. None of the oil marketing companies or oil refineries have had their loans written off.
Exactly. But banks are showing signs of reluctance to provide credit or lend out money or loan out money to the public or the private sector enterprises. Now, there is this high cost of doing business as well and rising inflationary pressure in Pakistan as well. So, having that sort of a relationship with banks is difficult, is it?
Well, the main challenge is that the banks don't understand the model of an oil marketing company. They don't realize that we are generating a whole lot of cash flow. They look at the assets. Now, the assets of an oil marketing company are its retail outlets. We don't have real estate assets. So, our main asset is our distribution network through whom we sell the product. And there is hardly any credit risk in that because we sell to our distributors on advance payment. We take 24 days or 48 hours in advance payment from them, and then we pay to the refineries. So, there is very little scope of unless a company is being very badly managed or unless the owners of that company have deliberately indulged in malpractices, that an oil company model should not be a viable business model.
Exactly. And speaking of taking money from one, giving to the other. There is this intercorporate circular debt as well, which is haunting, let's not forget, the OMCs and refineries. We'll be speaking about that, Mr. Mumtaz. We'll be taking a quick break here. Stay with us. We're having an interesting discussion with Mr. Mumtaz Hasan Khan, Chairman and CEO of HASCOM, and we'll be talking about the intercircular debt, which has reached to new peak levels. Whether or not the government will be addressing that, we'll be speaking to Mr. Mumtaz right after this short break. Stay with us.